Good afternoon, viewers. Today we will dive into the latest developments in both the traditional financial world and the cryptocurrency space, as significant legal and institutional changes shape the future of the markets. Crypto market holds firm at $2.79 trillion amid small cap rally and investor caution. The cryptocurrency market remains stable, holding a total capitalization of approximately $2.79 trillion, reflecting a modest 0 and 14% growth over the past 24 hours. This steadiness persists even as the 24-hour spot trading volume has declined by 0 and 97%, standing at $35.28 billion. Former United States President Donald Trump sought to calm financial markets by stating that interest rates should be lowered. His remarks suggest a possible shift toward a more accommodative monetary environment, generally favorable to risk assets like cryptocurrencies. Despite this, top cryptocurrencies have shown minimal movement. Bitcoin, the leading asset, rose only 0 and 38% to $84.715, maintaining its dominant position with a 60 and 23% share of the total market capitalization. Much of the market excitement is concentrated in the small cap sector, where tokens have posted double-digit gains. Leading the surge is Reef Chain, soaring 116% to reach $0.00046 and a market cap of $19.4 million. Other notable performers include MASA with a 57 and 2% increase, Sencoin up 31 and 6%, Kishu Inu rising 30 and 3%, and OpenLoot gaining 30 and 2%. Among large-cap assets, Bitcoin stands out, climbing 10 and 8% to $254.1 with a market cap of $2.19 billion. Other top gainers include Artificial Superintelligence Alliance, up 8 and 54%, Immutable, gaining 7 and 54%, Hyperliquid, advancing 5 and 57%, and Render, up 5 and 18%. However, not all cryptocurrencies are thriving. Several meme tokens, including Fartcoin, Baby, and Bera, have each dropped more than 10% over the last 24 hours. Additionally, major altcoins are under pressure. Ethereum fell by 1 and 16% to $1.580, and XRP dropped 1 and 69% to $2.06. Investor sentiment remains cautious, with the Fear-Greed Index sitting at 33, firmly in fear territory. This highlights the market's underlying uncertainty, even as selective tokens rally. In venture capital news, OROAI raised $6 million in its latest funding round, while Neutral and Glider secured $5 million and $4 million, respectively. These funding successes reflect continuing interest in innovative blockchain-based projects despite broader market hesitation. On the technical front, the industry has seen meaningful developments. Galaxy Research introduced a new voting mechanism designed to help reduce Solana inflation, a move that could positively impact the network's long-term value. Separately, EigenLayer enabled mainnet slashing on April 17, enhancing its network security. Coinbase also announced significant upgrades. The platform launched new Solana wallets and increased block processing speed by 5 times, allowing faster and more seamless interaction with Solana-based assets. These improvements aim to enhance the user experience and keep Coinbase competitive. Meanwhile, Bitcoin's dominance rose by 0 and 25% to 60 and 23%, suggesting a shift of capital back into Bitcoin from altcoins. Ethereum's dominance, by contrast, decreased by 1 and 42% to 6 and 83%, reinforcing the trend of capital rotation toward perceived safer assets. Overall, the crypto market stands at a pivotal moment. While Bitcoin and other major cryptocurrencies show resilience, the energy in the small-cap space highlights a willingness among some investors to seek higher returns. However, with market sentiment cautious and macroeconomic uncertainties looming, the coming weeks will be crucial in shaping the next major move for digital assets. Investors are advised to remain vigilant, balancing optimism with caution as the industry navigates this delicate period of transition. Bitcoin payments are rapidly becoming mainstream as global adoption grows. In a significant step toward the normalization of Bitcoin in everyday transactions, Rahim Tagazadigan, a prominent economist and the director of the Bitcoin Association Switzerland, recently demonstrated just how seamless cryptocurrency payments have become. During a visit to a Spar supermarket, Tagazadigan showcased the efficiency of using Bitcoin at checkout. In a video shared on LinkedIn, he simulated a real-world transaction, illustrating that paying with Bitcoin is now as straightforward as scanning a QR code, a process familiar to millions of shoppers worldwide. This convenient payment solution leverages the cutting-edge capabilities of the Bitcoin Lightning Network, a peer-to-peer technology designed specifically to accelerate and simplify Bitcoin transactions. Supporting the initiative, DFX Swiss, a Swiss crypto financial services provider, revealed that the new payment option is powered by Open Crypto Pay, an innovative protocol aimed at bringing practical, in-person crypto payment solutions into the mainstream retail environment. The Zug-based Spar Supermarket's pioneering move could have far-reaching implications, potentially setting the stage for a broader global shift toward Bitcoin adoption at major retail chains. Spar is no small player on the global stage, boasting more than 13,900 stores across 48 countries and attracting an estimated 14.7 million shoppers daily. Should Spar decide to roll out Bitcoin payments across its international network, it would mark a historic milestone in the integration of cryptocurrency into everyday commerce. The fact that Switzerland is the launching pad for this initiative is hardly surprising. The European nation has long maintained a progressive and welcoming attitude toward cryptocurrencies. According to data from BTC Map, there are currently over 1,031 businesses in Switzerland that accept Bitcoin payments, placing the country among the top adopters of crypto payments in Europe. Switzerland's commitment to embracing digital assets was further underscored recently when the Swiss city of Lugano, which declared Bitcoin and USDT as legal tender back in 2022, unveiled a statue commemorating the elusive Bitcoin founder, Satoshi Nakamoto. Such gestures reflect a growing cultural acceptance of cryptocurrencies, positioning Switzerland as a global hub for crypto innovation. The momentum behind Bitcoin's use as a payment method is not confined to Switzerland. Across the globe, merchants and institutions are increasingly recognizing Bitcoin's potential as a viable and efficient means of settlement. In 2022, Pick n Pay, one of South Africa's largest and most popular grocery chains, made headlines by announcing that it would begin accepting Bitcoin payments across its stores. The move marked a major endorsement of cryptocurrency within the mainstream retail sector in Africa, illustrating Bitcoin's growing appeal as a day-to-day payment tool. Luxury brands have also joined the trend. Iconic names such as Ferrari and SFL Maven have embraced Bitcoin payments, signaling a broader acceptance of cryptocurrencies in high-end markets traditionally associated with exclusivity and tradition. Education, too, is stepping into the future with Bitcoin. In a groundbreaking decision, Lomond School in the United Kingdom recently announced that it will start accepting tuition payments in Bitcoin starting from the autumn term of 2025. This pioneering move demonstrates Bitcoin's growing legitimacy and flexibility as a medium of exchange, even in sectors that historically relied on conventional banking methods. With these substantial advancements from retail and luxury goods to education, it is evident that Bitcoin's role as a global payment medium is expanding at an unprecedented pace. As institutional support strengthens and national governments adopt increasingly crypto-friendly policies, it seems inevitable that more businesses and organizations will incorporate Bitcoin and other cryptocurrencies into their payment ecosystems. The steady march of Bitcoin into mainstream commerce represents not only a technological revolution, but also a cultural shift, as people around the world become more comfortable using decentralized assets in their everyday lives. As this trend continues, the future of payments could very well be built on the blockchain.